This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC officials heard from industry experts that U.S. oil output growth will likely remain limited in 2021 despite rising prices, OPEC sources said, giving it more power to manage the market in the short term before a potentially strong rise in shale output in 2022. Officials from OPEC's Economic Commission Board, ECB, and external presenters attended a meeting on Tuesday focused on U.S. output, the sources said. OPEC heard from more forecasters on the outlook for 2021 and 2022 at a separate meeting on Thursday. While there was general agreement on limited U.S. supply growth this year, an industry source said for 2022 forecasts ranged from growth of 500,000 barrels of oil per day to 1.3 million barrels of oil per day.
Spot liquefied natural gas, LNG, prices in Asia slipped this week, but remained at double digits as demand was firm globally from the power generation sector, according to trade sources. The average LNG price for August delivery into Northeast Asia was estimated at about $11.70 per metric million British thermal units, MMBTU, down 10 cents from the previous week, they said. The price for cargoes delivered in July was estimated to be about $11.90 per MMBTU, down 20 cents from the previous week, they added. Still, LNG prices have more than doubled since late February.
Moving on to the top news in the energy sector.
Commodity merchants and investment firms such as Citadel, Gunvor and Trafigura are bolstering U.S. teams that specialize in trading renewable fuels as demand soars, according to people familiar with the matter. Many trading firms already have an established presence in Europe, but the production of advanced biofuels that act as petroleum fuel substitutes has driven hiring in the United States in recent months, the sources said. Renewable fuels account for roughly 12% of U.S. energy consumption, according to government data, and are growing every year. In April, hedge fund Citadel made its first entry in the U.S. renewable fuels trading space, a source close to the firm said.
China's diesel exports plunged 38% in May from a month before to their lowest level this year, as reduced fuel output during the refinery maintenance season forced refiners to prioritize domestic consumers. China shipped out 1.68 million tons of diesel last month, data from the General Administration of Customs showed on Friday. That compares with 2.72 million tons in April, but was still higher than 1.45 million tons in May last year. May gasoline exports were at 1.55 million tons, edging up 5% from April and more than double the low base in May 2020 when the COVID-19 pandemic curbed travel demand overseas.
Next, we have the top news in metal markets.
Copper on Friday was on track for its biggest weekly fall since March 2020 after the Federal Reserve signaled it would begin to tighten monetary policy and China said it would sell state reserves to limit prices. The shift in tone from the U.S. central bank also pushed the U.S. dollar towards its largest weekly gain since April 2020, making metals more expensive for buyers with other currencies. Stock markets fell. Benchmark copper on the London Metal Exchange (LME) was down 1.7% at $9,159 a ton at 1650 GMT and down around 8.5% this week.
Gold struggled for traction in choppy trading on Friday en route to its worst week in over a year as the dollar extended its rally on the back of the U.S. Federal Reserve's hawkish outlook. Spot gold edged 0.1% lower to $1,770.96 per ounce by 1:51 p.m. Eastern Daylight Saving Time, stalling an initial uptick on some bargain buying. Prices were down 5.7% for the week, having slid more than 2% on Thursday. U.S. gold futures settled 0.3% down at $1,769 an ounce. Palladium was poised for its biggest weekly fall since March 2020, while silver was down over 7% for the week. We will now look at the top news in the agricultural sector. Chinese state-owned importers bought at least 8 cargo shipments of U.S. soybeans on Friday, or at least 480,000 tons, the country's largest U.S. soybean purchases in 4.5 months, 2 U.S. traders familiar with the deals said. The deals, which were for shipment from U.S. Pacific Northwest ports mostly in October, came after new crop November soybean futures on the Chicago Board of Trade tumbled nearly 7% on Thursday to the lowest point since March. China had slowed its U.S. soybean purchases in recent months as cheaper shipments of newly harvested Brazilian soybeans came available and as U.S. soybean prices soared to the highest in about 8.5 years.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.